doing well wherever you are. And today's video is going to be about VA loans and about what are the most common questions, myths, and the process. So I've got Jeff Stone here with Veterans Lending Group. He is actually my go-to VA lender here in El Paso, Texas. And I just wanted to ask him some questions so that those of you that are veterans or active military, if you're considering or ever thought you couldn't qualify for a loan or didn't think you wanted to buy a house, you've got a little bit of information. So the first time we met, Jeff, that was interesting. We kind of butted heads.
Yeah.
I had a client that was referred to me by another client, another veteran, and he happens to be one of your very good friends, correct?
Correct. Yep.
Yeah. And so he insisted on wanting to use you, and I saw your name and the lender name, and I was like, oh, geez, here we go. Because as realtors, it never fails. I've got a friend or a cousin or somebody that I know that does loans, and I want to use them. And 9 times out of 10, it turns out to be a disaster. You know, as a realtor, we want to use somebody that we know, that we trust. We don't want to gamble. And so you came along and we wrote up the offer, and I said, okay, how much do they need for closing costs and this and that? Okay. And then you said you wanted what phrase written in special provisions?
Yeah, I'd have to actually look it up, but ultimately we want the closing costs to cover closing costs, prepaids, any discount points, and buyer debt reduction. That's the big one at the end.
That was the point of contention with us.
Yeah.
So as a Texas agent, we are told that we cannot practice law. So for us to write anything in special provisions is a huge no-no. The client can write it in there, but we're not allowed to. And so my concern is even if the buyer were to put that provision in there, it would cause a big red flag. And I said, first of all, I've been doing real estate for blah, blah years, 18 years. I worked with USAA for 15 of them. I've never heard that. I didn't believe you. And so I said, all right, send, you know, you're like, it's in the VA handbook. I'm like, okay, you know what? Send it to me. And you did.
Yeah.
And you told me exactly where it was. And I read it and I was like, holy smokes, he's right. And so I went back in and I reread the Texas contracts. There is some verbiage in there that says whatever VA allows for. And that's that one little provision that was in there that I've never heard of. And that's when I realized that you probably know more about VA loans than anybody else I've ever met. Because you've read that handbook.
Yeah.
How many times?
A few, yeah. Daily.
Yeah.
Yeah.
So let me ask you, why is Veterans Lending Group different from USAA or other companies that do a lot of VA loans?
Sure. Yeah. I would say probably some of the biggest reasons revolve around our team, right? So I'm an Army veteran. I think over 80% of our loan officers are veterans or spouses of veterans or active duty. Most of our crew are affiliated with the military in some way, shape, or form, whether it's spouses, parents, children, brothers, sisters, you know, we all have a tie to it. You know, we do have some that are just patriots who care about the military community, but I think in large part, we all have walked the walk. We all have spent time in that life. You know, so it kind of gives us a different perspective from someone who hasn't been there, right? You know, there's an element of being kind of pursued in a negative way by financial institutions, not just in mortgage, but just in general. As a private, I was taken advantage of by somebody selling computers in the mall at Fort Campbell, you know, and I paid $3,000 in interest on a computer because I was financially illiterate, you know. And I guarantee you can talk to most veterans and they've either had that happen or know others that have had that happen. And so we kind of all understand that and have created a lot of free education really to kind of help circumvent and fight that, you know, so that we're not being targeted, that we can be our own advocates. We simply just care about our brothers and sisters and want them to be able to stand up for themselves, in the event that they don't have someone like us in their corner at the time of the transaction. So that's a big one. We can probably get into a lot more specifics later on, but ultimately we don't have any additional rules or guidelines or what we call overlays in the industry. Basically, the VA created this program and then told any lender that offers it, you guys can add to the standard, but you can't take away from it. And so we don't add to the standard. We just go by what the VA
create the easiest
says.
path for the veteran to buy.
Yeah, ultimately we're trying to keep the veterans benefit open to them as much as possible without limiting or excluding people that might otherwise qualify, because we wanted to add our own overlays.
Right. So basically, from a visual point of view, I would imagine that VA has these set of rules, right? As far as what needs to happen to qualify. But then a bank that wants to use the VA insurance, right? Because that's what it is. They create their secondary set of rules. So now you have a veteran that has to not only comply with the minimum, but also the lender's requirements, correct?
Yep. Yeah,
Okay.
yeah, exactly.
So that being said, one of the things that we see a lot is they say, what's the minimum credit score for VA? Because this bank will do it for this much and this bank will do it for that much. What is the answer to that question?
Sure. Yeah. The short answer is there is no minimum credit score requirement, right? Now, that's not going to be the case for lenders. Lenders have their own requirements on top of that, which is why you get a different answer with every person that you talk to. So, there's been a few amidst COVID that have even raised their scores that have veterans in their name, and it's unfortunate. They have their reasons, but for us, it's kind of like, as veterans, it's like, well, you're kind of robbing me of my benefit, right? Because you're now changing the program as it was written, and now I don't qualify. I got a message this morning from somebody saying, hey, everybody tells me I need to be at this number. Can you help? Well, maybe we have to take a look, but in short, the VA has no minimum requirements, so it's possible, right? And just that little bit of hope alone can go a long ways, because it's,
but isn't it true also that the lower the score, the higher the risk? So their interest rate may actually vary depending on how risky their credit score is?
Sure, absolutely, 100%. Yeah, I mean, that's just, at the end of the day. Yeah, they've got to investors have to mitigate the risk, right? And the way that they're going to do that is charge you a little bit more, and if rates are still down, get yourself into a house, start building the equity, and then once you've got your credit reestablished, refinance into a lower rate.
That's right. That's
right.
At
least start down that path. Yeah.
Yeah. And so, why would one bank qualify a buyer for a certain amount, but then that buyer goes to a different bank and they would qualify them for a higher or lower amount? Why would that vary?
Sure. Yeah, it's a good question. I've got a situation right now where somebody qualified with a big national bank, and then they came to me and there's like, we can't qualify for enough to buy a house. And it's like, oh, that's interesting. Well, let's take a look. And long story short, it came out to be what we call the debt to income ratio, or DTI, right? And basically their debt to income ratio was too high. And so the bank had their limits that they had set in place and say, you can't go over, I think this particular bank is a 55% debt to income cap, right? Yeah. And this is another issue with the VA handbook. The VA handbook does not have a debt to income cap, period. And it's kind of left up to the lender to determine how they want to put a cap on that. For us, we've seen up above 70%, and obviously we're not going to give somebody put somebody in a house they can't afford. But if you're making $15,000 a month, 70% of your income being used up for all of your debts, you still have 30% of 15 grand. That's $4,500 a month of residual income. There's no reason you couldn't put somebody in a house at that. So they're meant to be guidelines because it's not black and white. But if a lender has a cap on a debt to income ratio or something like that, it can definitely limit what you can qualify for. You know, doesn't always mean that we should always push somebody into a house of, that high,
Right.
but extenuating circumstances, right? So I
One of
would say
my pet
that's the
peeves
biggest.
with dealing with sometimes with clients or other lenders is they don't realize or they don't take into account what the actual tax rate is here. So I am many times. I had a client that was referred to me by one of these large lenders, and they said, "Oh, your payment is $1,200." And I can buy, and it's a $400,000 house, which in El Paso is not probable if you're not putting any money down, because our tax rate is on the higher side. Now, the other thing is we don't have a state income tax, so you pay one way or the other, right? But
Sure.
that's one of the things that they don't factor in, and or they get wrong. And so that for me is a huge pet peeve. That's why I always tell my clients, make sure that they have the right tax rate, because it does vary, from
Yeah.
county and state. Um, so, I've gotten clients in the past who have told me, "Oh, I've got great credit. I don't need to get pre-qualified." Why is that not always wise?
Yeah, I think we see it every day. The reality is, you can monitor your credit with things like Credit Karma or some free credit reporting agency, and they're going to get you close. But in Credit Karma, for me personally, it was off over 120 points in the last time I checked from what my credit actually was when I ran it. So for starters, you can't actually see a true mortgage credit report until you have it ran. And so it can differ immensely. So that's the obvious glaring one right off the bat. But I think beyond that, a lot of times there's things that you wouldn't consider are going to be an issue that actually might be, right? And you're asking somebody to loan you hundreds of thousands of dollars. They need to make sure that you can repay it, and sometimes that means considering things that you wouldn't have thought are part of the process, right?
Like
And so,
student debt, deferred student debt, that you still have to take that into account.
yeah, and so it's just, there's so many pieces to this that it's not just, oh, I have good credit, I'll qualify. Well, how are you paid? When did you start your job? How long have you been working there? Do you have a 2-year history if you've got some kind of irregular pay?